Hey everyone, this is Brandon Oliveira from Possible Promise Financial, and I wanted to start a series of videos on key financial principles you should know. Because a lot of times I'm working with a client and we're going over some financial reports, and there are just a lot of terms that they aren't aware of that I believe are important to know. And so I want to create a central resource where I explain these in greater depth. So the first term I wanted to go over is the difference between cash versus accrual accounting. And you might wonder, why would I need to know this? But the first reason is for your taxes. You do need to mark on your taxes whether you're reporting in accrual or cash basis. So that's one reason. But the other reason is for your books. When you are doing your bookkeeping, if for some reason you're doing it yourself, you need to decide pretty early on if you're going to track everything in cash or accrual basis. And it's not always easy to switch between them, especially if you start with cash. It can be difficult to switch over to accrual. But if you do start with accrual, you can, however, generate cash basis reports. That's one thing accrual has going for it. But I'm going to describe each of these terms and why I believe one is better over the other. So, cash basis is pretty intuitive. It's what you would be aware of from handling your own personal finances. So you have your paychecks that come in every month, every 2 weeks, however often they come in. And you have your bills that go out, and the difference between those is basically your savings. And so it's pretty simple. Money goes out when it goes out, money comes in when it comes in, and that's about all there is to it. And so when you start a business, it's tempting to carry over those same principles, and you think, okay, well, I have my income that comes in every month, and I have my expenses that go out every month, and the difference is my profit. But it's not always that simple. There are some complications that come up that I want to go over. So, first thing is, let's say that you have done some work for a customer. Let's say it's the end of 2022, it's in December, you send out an invoice, but you have net 30 terms on an invoice, so the customer doesn't pay until January. And so the question is, do you count that income for 2022 or do you count it for 2023? And that's obviously really important for taxes. You kind of need to just decide, where am I going to count that income? Do I count it when I sent out the invoice? Or do I count it when I actually received the cash? And you might think, well, that's not really all that important. But you see at least why you do need to decide one or the other, because if you're inconsistent, then that can create problems. But there are other issues too. So let's say your business makes $10,000 a month, and you want to prepay your rent for the whole year. And so you pay, let's say it's $1,000 a month for rent, and let's say you pay, $12,000 upfront in January. And so you see like this $12,000 massive outlay in January and then nothing else for rent the rest of the year. Is that really accurate? And the thing is, so if you're making $10,000 a month, $120,000 a year, then were you at a loss in January because you made 10,000 but you spent 12,000? And then did you really have that much more of a profit every month because you no longer have the rent expense? That's not really accurate, because really what's happening, you just prepaid that rent. It's called a prepaid expense. But in actuality, you spent $1,000 a month. It's just you spent it all up front. And so if you want to have an accurate picture of your profit and loss, you want to see $1,000 every month going out. You want to see that $10,000 every month coming in, and you see, okay, there's, obviously that's not the only bill, but, among your other bills, and you see your profit, right? It's not accurate to say I spent $12,000 in January on rent, because that messes up your profit and loss. You were not actually at a loss in January if you're counting it accurately. So you want to match up each month with the rent that would have gone out had you not paid it all up front. So that is one issue. Another issue, in accrual basis accounting, you try to match up the revenue you make, the income you make, with everything that went into it. So a common example is, let's say you make $10,000 a month. We'll use the same amount, and you have sales representatives that you pay 10%. Okay, so again, $1,000. So, let's say in January you made $10,000. Your sales representatives sold that. You have to pay them 10%, but that accrues all throughout January. You don't actually pay them until February. And so every month is going to be a little bit different, how much you make and how much you have to pay your sales representatives. So when do you count the amount you pay them? Do you count it in February when you actually pay them? But they did the work in January. That's when it was accrued. That's when the revenue was received. You received $10,000 in January. So if you want to get an accurate picture of your financials, you want to say, okay, well, I earned $10,000. I owe my sales representatives $1,000, even if I don't pay them yet, but I owe them this. And so that is important to keep those two together in the same accounting period. So that's another issue. Another thing, is when you receive a bill, do you count that bill in the period it was received or in the period it was paid? So, you don't want to say, I had more profit because I didn't pay my bills this month. I waited to pay my bills for another month. So, if you get your utility bill, or whatever it is, this month, well, I'm not going to pay until November. Right now it's October. I'm not going to pay until next month. Did you have more profit this month? No, you still owed that money. That money is still owed. It's not profit. It's just money you haven't paid yet. And so these are all the problems with the cash basis of accounting. And so that's why we have accrual basis. So accrual basis is just basically you count income and expenses when it is earned or incurred, not when cash actually changes hands. So you count your income when it's earned, whether or not you actually receive that cash yet. And you count your expenses when they're incurred, not when you actually pay the expense. Slight difference from cash, obviously, but it's important. And so, again, if this month you invoiced for $10,000, you count that $10,000. You might not get paid until November. You might not get paid until December. You might not get paid until January if they're paying really late. But you earned that money in October this month, and so you count it in October when it was earned. And so that's where we go into accounts receivable and that kind of thing. Same thing if, for the bills you receive from vendors, that you count them when it's incurred, when the expense is incurred. You receive a bill, whether or not you pay it today or next week or next month or in 2 months, that cash changing hands is just incidental. It's the primary event is the bill being received, the expense being incurred, and so that goes into accounts payable. You receive a bill now, you might pay it in 30 days, you might pay it in 60 days, you might pay it right now, but you count it right now. You count it for this month. And there's so much more. I mean, accrual can be rather difficult. That's the one downside to it, because you have things, again, like prepaid expenses. You have things like deferred revenue, where if if a customer prepays you for work you haven't done yet, you can't take that as income because you haven't done the work yet. You haven't earned that income yet. And so that is important to keep track of in the books too. So, yes, it is more difficult. And that's why, I really do recommend anyone who's starting a business, you don't want to go cheap on keeping your books. I always recommend hiring a bookkeeper, But, you want to be aware of this, that you generally want to count your income and expenses when it's earned or incurred, not when the money actually changes hands, just because it's a lot more accurate than the cash basis. And so, obviously I very highly recommend using accrual basis. That's what I use with all my clients, and there's not much of a reason to not do that. And the bigger your business is, certain businesses are required to use accrual basis. So there's not really a good reason not to. Besides, again, it's a bit more difficult, but either you want to learn how it works and so do it properly, or you want to hire a bookkeeper who can do all that for you. So I hope this helps. And I'll be, again, doing more videos like this about other terms that I believe you should know. So subscribe to my YouTube channel if you'd like to be notified when I release those. And if you want to learn more about my work, you can go to my website at www.possiblepromise.com. I do offer bookkeeping and also individual personal money coaching. So I have a variety of services I offer. I'll give the links in the description below this video. So thanks again for listening to this, and I hope it made sense, and I'll see you in the next video. Thanks everyone, and have a nice day.